The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman.
Basil Chapman, October 24th. My pleasure to be here, Tiger Technicians Hour. And we've got the Dow up 73, the S&P's up 3. Isn't that interesting? Last week the Dow was lagging. Today and yesterday Dow's leading. Today the Dow's leading. And we've got a very interesting market. Remember, yesterday was a very important session for a whole bunch of reasons. We'll get into that. We've got the comp index up 13 at 39.20. Gold is up 13 at 13.47. I'll show the charts in a moment. Silver's up 14 cents at 22.73. Platinum's up 19 at 14.53. You've got high-grade copper. High-grade copper is down at 3.26. Oh, man, I tell you, the divergences here in this rotational market are quite exceptional. Crude oil is down at 98.50, and you've got bonds down just a little bit. Bonds are down, and I'm being covered right there. Bonds ups, down, bonds again, down 7.30 seconds, dollars down a little bit, and the euro is up. Now let's go through all those things, and let's get a sense of what's going on. What are you talking about, rotational market? Let me tell you what I'm talking about. First of all, if you're looking at Tiger TV, I haven't done that. I've got to do it right now. Click, and we're on. And there it goes. Okay, we're seeing the charts right there. What I'm showing is, as usual, we start off with the E-minis up 2.75. This is the E-mini December contract, up at 1744.50 in a sideways. This is a real sideways. Well, let me just define. Depending on your time frame, this is sideways, trading between 754 and about 737. Now, what we're looking at is that 9-period exponential moving average in the 120-minute chart is being hugged as the price goes over, then over. Now it's under, trying to get back above 1745 will get you back above it. Most importantly, you've got a peak E/A in the daily chart. Now, the technical tools that I use are tools that I've worked on and honed and studied and traded and done all sorts of things, not just for a day or two or a week or two or a month or two. This goes back years, in certain cases even decades. And what I have found, and this is the sort of thing I love to teach in the classes that I have, is that if you have a certain sign of strength, if that strength maintains its higher level, let's call it the technical tool itself is making a high level or a low level consolidation, that imparts to you enough information to say that as long as the price is performing correctly, it's in a buy zone. In this case, I'm looking at the S&P futures daily. At 93%, the stochastic remains in a very strong buy mode. The fact that the MACD is moving up and the price has not gone yet to 1754.75, travels in 25-cent increments, is not a problem because it's a daily chart. If by the end of the day, this potential small Roman candle that we're looking at from yesterday, if that is taken out, if at any point 1738 is hit in the E-minis, be careful, because not only will the low of 1734.50 probably be tested, you could even go down to 1728.30. I'm talking about the potential. And that rectangle formation very often can continue for quite a while. That's the 120-minute chart. And more importantly, that can continue, and if the technicals start to strengthen and hold, you break out to the upside. If the technicals are weakening and the price holds, that's a positive. If the technicals weaken with the price, and that'll concur with what I'm talking about on the weak side of the E-minis, then it'll come down and break that rectangle pattern, and again, target would be the 1728. Now let's look at the upside potential. Not only will it break above 1754.50, a much greater chance of it not being F/G, but actually, F/B, but actually brand new leg B. Now, let's get out of this and talk about some other things real quickly, because I know I forgot to write it down. It was very important. I just want to do this. We had a call, I think it was yesterday. Was it yesterday? Yesterday? Yeah, I think it was. Oh, Mike in Miami. We were looking at the UNG, and what I had said in the United States Natural Gas Fund was that if, let me just show this on the daily basis as well, UNG, trading now at 1850. What I said was, everything about this chart says, I'm looking at it as rather positive. I also had an email from one of our dear friends here at TFNN, a listener who's always calling in and just has some very nice trades on very often about this. And what I said is the 1820 to $18 area is absolutely key to hold. And when the report comes out at 10:30 of inventory, if there's a negative reading, what you want to see, the best condition would be to see a sudden spike below where it was at 1830s, 1840s yesterday, get into that 1820, $18 area, and then rebound strongly. And within, I can't remember if I said this, but I know I was thinking of it. I said, and in a very short time, move towards the 1850s, and then in the afternoon, you want to see that hold. You don't want to see it given back, because sometimes natural gas can do that. Well, what have we got? We've got, where it is, let me put this chart up. This is the 10-minute chart right there. Let me open it up. Now, I've got candlesticks. You don't need candlesticks in this particular methodology. And it goes to a peak D on the 23rd. That was yesterday at 11:10. Oh, now I know why I get that. It's called Voice. Ends with a Y. Voice. Oh, I remember the term. I just read it in the Boston Globe the other day. Voice, cry, voice, something or other. When you get this falsetto that just pops up. The reason I'm getting that is because instead of sitting back, I'm leaning forward to see the price and new highs, new lows. Well, natural gas went yesterday from the 1835 level to 1861 at 11:10 yesterday morning during the show, went sideways, pulled back very gently. It went to trough A, trough B, trough C, trough D, trough E, and trough F. That's on the way down. We talk about troughs. So I've always had trouble with that word. What a funny word, a trough. Anyway, went down to trough F, and now that can't be leg A. I'm going to be teaching this in my Master Trader series. If you ever want to learn, ladies and gentlemen, if you ever want to learn about the Chapman wave, if you want to learn about these techniques that, as I say, I've spent, I don't know how many hundreds of thousands of charts I've looked at and done these different techniques, developing all these techniques. If you want to learn about the Chapman wave, you'll learn that cannot be A, because the low bar cannot be the high bar. You need to know that it's a low bar. How do you know at this particular point right there on the left side that it's a low until you get that bar? And that bar has a higher low. So that means that, in fact, it's bounced. And from here you can say if there's a high above 1847 on this 10-minute chart, that becomes leg A. But you remember I called it a floating A. So that's an A. That's an A. And if this bar closes, which it looks like it's going to do in the 10-minute chart at 1845, closes below the high of 1858, that's the high bar itself, it makes peak A. And that's why I said it was great to have an entrance at that point when we were talking, I can't remember if it was 1839 or 1842, something around there. And then you're in the trade with a stop, I'd say below, I think 18, I don't remember exactly what I said, if I could go back and figure it out, but underneath the low bar the day before. That's number one. And number two is that you want to see all the action make higher highs and higher lows. And that should go into the afternoon. And it's starting off on a 10-minute chart, because it's too much. You can't go to the 120 chart and think you're going to get all that information. You won't get it. Why? Because look, the 120-minute chart has made that arch formation. There's a left side, right side price low that would come in. I have to take it to that candle right there. So that's too much. So take it to that candle. Perfect. And so far, that candle has not been taken out, and that's the low of 1790. And we'll see. That's all you can do. Look, everything here says that this is the chance for natural gas to at least have a rally. And if it doesn't rally, it not only will take out the low of today, 1818. If it does that, it's going to test this candle right here. The candle of the 4th of October, 1807 to 17.90. I thought I'd go through that. I thought it was, to me, it felt like a very important sequence of trading ideas, trading formalities, certain things that I consider to be, well, in this particular instance, very important, obviously. So let me just do this here. I want to show the weekly chart. That is an upside down V right there. And let's pull back. Yeah, that monthly chart, I'm sorry, the weekly chart, I have to wait until 4 o'clock tomorrow. I have to wait. I want to see, can it get even close to the 9-period exponential moving average of 1884 or higher? If it does that, that's going to be very positive. Even if it just hangs around in the 1860 to 1870 area, that'll be good. I don't want to see it close tomorrow underneath the low of 1818, because that'll say time out. You've got to be a little careful here, because you want to see how that H pattern is going to unfold. Are we going to look at the series of H to M patterns as the monthly chart tries its very best to build upside potential? I want to spend a little time on that, because I think natural gas is really important, and to all of us, actually. So I'm going to go right into the nitty-gritties of some other things. I do want to just make this announcement, and I need to make this announcement because that's the one way you're going to find out. I've got this Master Trader series coming up November the 8th, between 9 a.m. and 4:30 p.m. It's live. It's a webinar. We call it a Master Trader Series only because this is the time that you get into great depth. And in my case, it's the great depth of the Chapman wave methodology. What will this entail? It's going to entail the concept of higher peaks and lower troughs, the notation and the importance of a peak D. It could be an E. I'll talk about how things can recycle to the upside. When we're looking at this, let me give you a very good example. In the Dow itself, INDU. The Dow needs to get from its high today of 15,496 to 15,394. Nope, so 15,518.10. 15,155.18.10. So that's the level, 1 penny above. And I do mean 1 penny above. I mean that if it goes to, good question I've got here from our friend down in Chile, and I'll answer that question in a moment. If it goes to 15,518.11, it starts leg D up. I'm going to show you something else that's very interesting. As we go to a break, you'll see this. Look, there's the GLD. What is the GLD doing? Leg D. So I'll be back. Basil Chapman, Dow's up 76 S&P.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
All right, folks, we're back. So that was looking at the UNG. We'll look at it a little later later on. We'll take a closer look at it when I do Larry's show, actually. Today being Thursday, this is the Futures Hour, and we'll look at the different futures. We'll go into many of the currencies and all that in that show. That's usually what Larry does. Of course, I cannot do it like Larry. I'll just do my best, and we'll see what happens. Dow's up 80, S&P's up 4.5. Hey, there are a couple of things going on. Gold, you remember, this is the technique that I'm going to teach, spend a lot of time on. How do you go from a buy signal to a buy mode, and the buy mode implies that it should go to at least a D. GLD, this is the Spider Gold Trust, in leg D right now. Stochastics at 87%, very strong. MACD, very strong. 120-minute chart, a little toppy, but broke above the 200-period exponential moving average. That's that pinky line right there that you can see. That's the 120-minute chart right in the middle here. Now look at this. There's the buy. There's the turnaround. Stochastic and MACD and on-balance volume are all, no, not the MACD. All the lower tools are starting to move higher. It goes to a peak A, gaps up to a peak B, pulls back, goes to a peak C, pulls back that 9-period moving average. Look how important it is. Look at the fast moving average of the MACD. Moves, goes up, and the stochastic finally gets to the 80% level, and that is very important because if it's holding there, it maintains the solidity of the buy mode. Hey, wait a minute. It goes to a P, it goes to D, and then it goes to, this could be a gray A because it's under the previous low, so I can make it gray. Look at that. Now I'm going to do the little cup formation. There's the cup formation right there. And look what happened. It breaks out. This could be E/B. I called it E for that moment. And then it pulled back like it should. You'd like expect to retest the 200-period moving average. That's that dashed line, the dotted line right there. Now look what happens. It holds the line. The stochastic holds at 80% and then drops. Actually, it was at 90% and then drops. It's at 70 now, but the price has gone to a new recovery high. So there's a divergence. And right at this particular divergence, that's where all you can do is say, if I'm long on a short term, there's a 120-minute chart. Remember, I don't want anybody to change anything based on some. This is just an explanation of how you can use technical tools. That says that the key support now, it's at the high at 129, at 130.10. The high today is 130.12. So it says right here, fabulous move. I mean, this is a great percentage move from 121 to almost 131, almost 10 points. They call it 9 points. Nice, very nice. But that's a dolphin look. It's deflected up, that fast-moving average, and the stochastic's turning up, unbalanced volume's turning up, relative strength is saying, okay, I'm turning up, reluctantly, but I'm turning up. So at the same time, it's saying, don't get too carried away. Use a different time frame. Now we've got I'll take this one. This is the UNG holding very nicely. Let's just go to GLD, and I'll show you something very interesting. So this is right here. I can go the left side low. You just glance to the left, and that's the lowest low, and you can start your buy mode. So buy signal, pulls back, buy mode, goes to C, goes to D, goes to E, and it's holding very steadily. That could recycle, but so far there's no. The MACD's looking good, stochastic's looking good, on balance volume has gone peak. A, B, C, D, E, F, or A, B, C, D. I just can't do it quick enough, but it's getting a little bit overboard, but nothing here is technically wrong. Everything about this is looking really good. The quicker moving average is above the slow moving average here. Nice example of that. So this is very good. So it's saying at this particular point, it's a 10-minute chart. I'm not talking about the day. The 10-minute looks great. The 120-minute looks great. At this moment, the next bar could be completely different. But you have to go from different time spans to be able to increase your comfortability. So at this particular point, all time frames are very good. And the weekly chart is the one that says, hey, get excited as much as you want. This is nothing. This is just a lousy little move from there to there in 3 weeks. Look at what it did before in 3 weeks. It had a huge move on a point basis. And then you say, but wait a minute, mister, that fast-moving average of the MACD is still very good. And that takes the shape of the price itself. I'm going to be teaching this in this Master Trader series. Let me just tell you now, the concept of higher peaks and lower troughs, the notation and the importance of peak D. What do you do there? How do you get that instant restart? You know, that wonderful technique that I developed. It cost me a lot of money, but I eventually developed it because it's trial and error. And that technique allows you to stay in the trade. The indicators and tools that work best in identifying buy and sell signals, sustaining rallies and declines, including the MACD and the stochastic, moving averages, on-balance volume, relative strength index, and others. Money management and the psychology is going to be all part of it. I'm really looking forward to this. I'll be back. Dow is up. Now it's up 87. S&P's up 5.
Wednesday, October 30th at 6:30 p.m., Andy Hecht has a special live online workshop for his subscribers to his weekly newsletter, the Technomental Commodity Report, called A Roadmap That All Investors Should Use, But Most Don't. During this hour-long live webinar, Andy will teach you how to use free and readily available market data to calculate the future expected price range for any asset. It's a simple yet powerful method that every investor should have in their toolbox. The best part is that you can attend this live online workshop, which will be archived, by simply signing up for a 30-day free trial to Andy's newsletter, the Technomental Commodity Report. And this is the last month to lock in the low introductory rate of only $39 a month. This price will be going up by over 25% come November, so now is the perfect time to get in on the action. Sign up for your 30-day free trial to the Technomental Commodity Report today by visiting the front page of TFNN.com.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi folks, Basil Chapman, Tiger TechniciansHour, and this is a very interesting moment in the market because very reluctantly the market's pushed up to plus 80, S&P's up 4, and I say reluctantly because it just... It's like there's a real struggle. I don't get the sense of conviction here. VIX is down at 13.22. It's just really an interesting market because it's rotational. The housing sector's been very good. The gold sector has been very good, the gold and metals, I should say. And then individual stocks. We're also seeing something very interesting in lower price stocks. When I say lower price in my opening call, we try as much. I always feel very strongly that if there is a very good company, a company that's been around for a long time and it's gone through trials and travails and finally it's turning the corner, the fact that it's low price is just a benefit because it gives you a nice sense of a percentage move when it moves up. And the same stock could be priced instead of at $6, it could be $60. And if it moves up, yeah, that's good, but the percentage differential isn't quite the same. And yeah, you are still with a good stock. The difference is only in price. So I try my best to find lower price stocks. And of course, I don't mind. We can go to, we've had $400 stocks as well in the portfolio. But that's not the issue. The issue is that in the context of looking at the market itself, that identifying the rotational correction part of it allows you to say, unless there is bad news, and markets need bad news, to continue down. You saw that just recently, when as soon as the moment the bad news filtered out of the market, boop, like a cork in water, market tried to pop back and pop back very nicely. So let's just continue on this theme. I had a question, and this is from Martin down, who used to be in Lima, Peru. I wasn't sure he was in Peru, and always followed the market, and actually he pretty much gave up living in Lima. He goes back there periodically, but he's now in the forest. He's been helping the poor people there with the mission that he's with, and cutting a forest, a bit of a forest, to make room for his own place to be able to grow things. And they've taken medications to different people. Just really a fabulous. He is my alter ego, in the sense that he's doing all the stuff that I never really do. I think about it, I do it, but I mean, that's really, that humanitarian side is so important. And thank you for doing that, Martin. Anyway, Martin always listens to us whenever he can, out there in the boondocks. He has to go to some little village, I think, to get a very slow internet service, but he listens. He says, thank you, Basil. I got confused with the peak count on S&P, SPX. I thought that the price declined from 920 from the 20th of September until the October 9th low, which made it a trough D, would start a new wave count. But if you say that we could also be at a peak D, then that makes it clearer for me, since I think we should be heading down. Briefly, I like the way you analyze the arch formations of time and how patterns are repeating up and down almost the same amount of days to go up as to go down. I enjoy a lot your programs, and I learn every time I listen to them. Thanks for all your help. Regards, Martin. So, Martin, this is what I'm looking at, because tonight you might have a chance to look at it. If you're looking at the S&P, I'm looking at the SPX cash. Whoops, I typed it onto the chart instead of right into the... I haven't resolved this problem yet. Things are working fairly smoothly. I don't want to change anything, but I'll have to do that. And I'll have to do that real soon. Okay, this is what I'm talking about, Martin. If I go back to the low of August... Look, this is very important. Let me just show you this. And this is the way the waveform works. That every now and again you get an alternate count. In my CD introducing the Chapman wave methodology, hey, listen to this. Included in the registration price. This is amazing. I don't know how we got to this. Where did I put the full thing? You save, if you register now for my course on Friday, November the 8th, between 9 and 4:30 p.m., that's what, 7.5 hours. Instead of $795, we're charging $595. But listen to what you get. You save $200 on the registration price. You get a month of my newsletter service, is $128. The opening call. You get a copy of my CD book. This is Introducing the Chapman Wave Methodology. That's a $249 value. Let me just show you something here. Look at this thing. This is the only red slide that I've got. The Dow Jones Industrial Average's final January 2000 all-time high was perhaps one of the most timely moments where a divergence had a domino repercussion. At the Dow Jones a final January 2000 all-time high, I think it was about the 14th of January, an inverted yield curve was simultaneously ringing a bell at the top. And now look at this. At a peak D in the 30-year T-bond yield, up at the 6 point, I should have typed in, it was 6 point, this is a continuous contract, so it might be a little bit wrong. Let's call it 6.6, 6.7%. That's where you got this inverted yield curve, and look what happened since that. Oops, look what happened. So that's peak ABCD. Remember how important a D is in the Chapman wave? Then it goes, pulls back. The red is the TYX, the 30-year. The TNX is the 20-year, is a 10-year. Then it goes, the 30-year and the 10-year. Then it goes ABCD again, pulls back. ABCD, 3 ABCD, peak A, peak B, peak C, peak D's in a row, and then it comes back down. And I always love this cartoon that I drew. This was back in 1980s. Husband and wife, the TV's on. Wow, it's the old-fashioned TV. If the government should begin to act in a fiscally responsible manner, and the two of them looking at one another, and then they start dancing and they sing in the tune, and if the Rockies may crumble, Gibraltar may tumble, they're only made of gold. So that's, I mean, how many times have we seen this? If the government should begin to act in a fiscally responsible manner. So talk about divergences here. So let's go back to our story. The alternate wave counter, my CD introducing the Chapman wave from methodology book, is chapter 10, starts on slide 242, but I talk about it many times. Peak F top, the 6 highest top in August the 2nd at 1709.67. I've got this, I must take it out because we already finished there. That was a trade that we had almost within a point of the top. Get it out there. Remove. Okay. Now what we're looking at is on the way down, there was a trough E at 1627.47. A really nice divergence between the stochastic and the MACD, the stochastic and both the MACD and the price of the S&P. Goes to 1627.47, starts a brand new move up. Peak A, peak B. But those are gray peak A's and B's. Why? Because this pullback never took out the initial one of 1560. So it means no matter how much time has gone by, you've got to keep it in mind that there's sometimes residual strength that's left over. It took me a long time to learn that. And then when we got to this point of peak C/G at 1729.86, remember that's where I did not go short this time. Did I not go short this time? No. Yeah, I think we did. However, whatever it was, there is that moment where it says, all I need is just one little pop up to the upside. Look, the next day, the high is 1725.23. It's only 4.5 points. You could have just easily popped up to make that D. Well, it didn't. So it takes a little while. Then you find out through the MACD failing soon after the stochastic was failing. The stochastic actually started failing earlier, and this on-balance volume is just an incredible tool. It often gives you the sell signal a day before. That's exactly what it did. I didn't see it until just a little late. I remember now. I picked it up a little later and we went short. But look what happened. It did go down to a doji candle for a trough D at 1646.47. Now look what happens. I have an alternate account C to G. This pullback, like the other pullback, never broke the initial low bar of 1627.47. That means I have no choice here but to have an alternate wave count that says G is finished, you can't go H. There's no H in the Chapman wave. But there is, the G drops off, and now you get the A. And I have to fulfill that obligation to keep the C all the way here and say it's a D/A. Just at the moment, I'm treating it as the preference. If there is a penny higher move above 1759.33, I will negate that and I'll call it B and I'll say we should be going higher. Yes, it could be E/B, but the work has been done. MACD's holding at 94%, MACD's stochastic's holding at 94%, MACD's still very good. Now let's go to Garrow in Newport Beach. Hi Garrow, how are you?
How are you, sir?
Very good, thank you.
All right. First off, I have to thank you regarding that visa. Yesterday, you warned me to get out of short. I do appreciate. I owe you a very big one. And not only I made money, and you warned me that, and you're absolutely right. Today, CLR, I bought it at $113. That's where the SAR parabolics are informed me to get in at that price, and yesterday's daily chart showed a green candle, which was conviction. Do you think this will go up to 120, towards 120, or it will roll over towards 105?
This is a great opportunity for me. I'm going to do this live. I've got the daily chart out. I don't remember. It must have been a long time ago that I notated Continental Resources, Inc. I don't have it notated, so I'll just do it right now. A, B, C, D, A, B, C, D. And this is a potential, let me just check, could be 1 penny. I don't think so. 1334.33. That's right. So this is a gray A. That becomes E/B. Oops, I didn't even get that. E/B. and that becomes F/C, with a preference at this particular point for a peak F. So the daily says, I've got an alternate wave count because the prices were all above the 9-period moving average. Now I've got a little signal that says the upside should be limited. There's a chance that it's not going to make a new recovery high, at least not right at the moment. Let me just go to the weekly for a second here. So I need to always go to the lowest, most identifiable low bar that's there. I'll talk about this in a moment. A, B. So that's, oh, this is great. So that's an A, and that's a B. And I'm going to talk about this in a moment. This is a technique that I talk about in my CD, Introducing the Chapman Wave Methodology. It took me, this is one of those that evolved over time. There are certain, almost all the techniques that I have are not techniques that I went out to look for. I didn't even know they'd be techniques. They are things that just evolved over time. The recognition that something had occurred enough times to say, wow, that is very impressive. I must keep it in mind as a technique. I'll talk about that in a moment. It's called the overlapping wave. And I needed just to do that. I can't let anything go when I'm actually doing this stuff because, okay, now I need to do the monthly chart. I'm going to discuss this. A, make sure that's the low. Yep, that's the low. Okay, that's a brand new low. A, B, C, D. And this is E. Whoops, I'll be there in a second. E/A. I don't want to give you any advice here where I haven't done my homework because that would not be good. I've got to always type things in twice here because it always it goes back to the box over there. B. Okay. So we've got a G/C right here. So the monthly chart at this particular point is still very strong at 80%, 87%. This is Continental Resources CLR trading at 115.13, up $1.65. In the weekly chart, we've got a leg E with a very strong candle to the downside, but then a fabulous bounce up this week. In the weekly chart with the MACD, stochastic still strong. It's what I call a Roman candle, but we have to wait for the week to finish, and it's in a leg E, possibly, I'm almost sure it's going to be a E buy Friday afternoon at 4. So what price are you in at? Are you in at about 114 something?
No, 113 even.
Oh, okay. That always makes it much easier, and I'll tell you why. Because now all we have to do is handle the trade. The low was 109.30 yesterday. The high was 114.03. You're into 113, and it's at 115.09. Here's my recommendation. I'm going to go to the 120-minute chart. Oh, that's starting to look quite good. If at any point it pulls back, you're in at 115.07. At the moment, it doesn't look like a gap stock that it wants to gap down. It's been very steady since the gap down yesterday. So the action today so far has been very steady. I'm going to suggest that you stay with the trade, but you have a stop. You can make it at 113.20, just so that it's a break-even trade at worst. I would actually prefer to raise the stop and make the stop at about 113.80, because if it's at 113.80, by this afternoon tomorrow, you want to see today's high of 115.88 taken out. If it gets to 116 something, it's very close to your 3 points that you wanted. Give me a moment. I just want to do a little bit more work on it, and I'll be right back. Gary, can you hold on?
Yes, sir. Yes, sir.
Okay, I'll be back. We're on with Darren Newport Beach looking at CLR, 115 right now. Down up 86.
Basil Chapman has just announced that he will be hosting a one-day online master trader class. Friday, November 8th, Basil Chapman will teach you the essential fundamentals he uses when trading the market with his Chapman Wave methodology. Included in this full-day online master trader class is 1 month of Basil's daily newsletter service, The Opening Call, a $128 value, as well as a copy of his CD book, Introducing the Chapman Wave Methodology, which usually sells for $249. Join Basil Chapman for this powerful one-day online master trader class Friday, November 8th, which will be archived if you can't attend live, where he'll give you a complete understanding of the Chapman Wave methodology and how to apply it to profitably trade any market in any time frame. For all the details and to reserve your spot while taking advantage of early bird pricing and saving $200 off the regular price, visit the front page of TFNN.com today.
Have you subscribed to the Gold Report yet? On Wednesday, August 14th and Thursday, August 15th, Tom O'Brien advised his Gold Report subscribers to close out 6 of their 9 open positions, all winning trades ranging from a 10.69% profit to an incredible 48% profit in just one equity. Tom O'Brien brings an incredible wealth of knowledge and experience to the gold market and the equities within the industry. That's almost 12 years since this powerful newsletter first began. And right now, you can get a 30-day free trial to the Gold Report by visiting TFNN.com. Make sure you're a subscriber as this volatile gold market makes its way back into positive territory after declining all the way from $1,900 to under $1,200 an ounce in only 2 years. Get your 30-day free trial today by visiting TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
What's the one thing that pulls people back from the breakthrough that they're moving towards? What's the only thing that really stops people from taking action? You and I both know the answer, and sure, we can come up with the reasons why we're not where we want to be, but the only reason that we don't do more with our life is fear. Or if you're an overachiever, call it stress. Simply put, there's something that happened to us in our past that's holding us back from the life we deserve, yet you and I are okay, we're here. So why should we let our past control our future? Exactly. We shouldn't. Hi, I'm Steve Rhodes with TFNN.com, and when it comes to your trading and investing, I can help you overcome your fear of loss. Together, we'll turn weakness into strength with a system I've developed called Mastering Probability. I'll teach you how to make your money work harder for you than you do for it. I'll teach you the tools that provide financial freedom. Go to the homepage of TFNN.com, click on my name, Steve Rhodes, and begin your journey of mastering probability risk-free. It's time to become a pioneer of your future versus a prisoner of your past.
This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Hi everyone, Basil Chapman, Tiger TechniciansHour. Dow's up 82, S&P's up 4.5. I prefer if the 500 were moving higher instead of just the 30, but that's the part of this rotational aspect. Boy, those home builders are doing well. We are on with Gary right now, Newport Beach, California. We're looking at CLR, which is Continental Resources. Now, Gary, this is what I'm looking at. As it stands right now, the 120-minute chart has acted very, very well. The I just wanted to do this quickly, CLR on the 10. If at any stage in the next hour and a half to 2 hours, there is a pop-up above the high of the day, 115.88. It's only 88 cents from here. It should be able to do this if this strength is going to continue. If it's able to do that, then suddenly you've got yourself some really good support at the 115.36 area to 114.80. And what would happen then is you should start to see higher highs and higher lows. But I would suggest to you that you do have some kind of a stop. And because if this starts to fail and it goes under, that was the opening, was it? Let me just double check. I think that was the open. It opened at 113.64. I would make 113.60 a stop, because if it takes out the opening price my guess is going to make a little arch formation and start to come back down a little bit. You really want to see it's great action as it is, up $1.48, $1.68, 1.48%. If it can take out today's high, preferably earlier than later, but sometime this afternoon, it's constantly making higher high and higher low support in the shorter term. I've also got a pattern that I call the falling X. There's two descending trend lines. One is coming down from the recent highs. The other one comes very sharply low to the recent lows. And that says the level to watch would be 116.64. If it takes that out, immediately it would target 117.48. So I would look at it as strong right now. Your entry could have been, I'm sorry to say, it could have been a point or two better.
Yes,
but
absolutely.
Your entry was great as it is, 113 round number, and it's up 2 points already. I think this is one of those that I would stick to your formula exactly. I wouldn't add mine. Mine would be to say that if it made the 3 points from your entry price, I would take off quite a bit. I would keep a little bit if it's still acting strongly, and raise the stop. But I got a feeling this is one of those that this is going to be perfect for your technique. You don't need to add anything to it. So, hey, great entry. Let's see what happens. And thanks so much for calling.
Thank you, sir. Thank you for your time. I appreciate it. Thank you.
My pleasure, Gareth. My pleasure. Folks, we were looking at Continental Resources, Inc. Now, let's just do a couple of little things here. I want to go back, and we're going to spend a little bit of time in Larry's show, which I'm doing straight after this, on the UNG trade. The UNG right now is trading at $18.49. The 10-minute chart of the UNG, and this is going to be quite important, is acting well, but it's a 10-minute bar. We have to wait for the bar to finish. If the bar finishes right here at 1849, that'll be the second good candle we've had holding the 9-period exponential moving average, and so far the faster moving average has not crossed above, is holding as support. MACD is good. It's that slow stochastic in the 10-minute chart. It needs to climb from 74.44, and it will if this takes out 1858, the high of today. If it takes that out at any point today, that stochastic will rise and it'll finally get to about 79 or 81%, and that'll be a good sign. If UNG goes to 66 and holds, finally 1878, the 200-period exponential moving average would be a target. It fails if it takes at 1840. So that's the end of my show, folks. The Dow's acting very well. I want to see the Dow up at 15,550s to confirm that it's going to do even better. And the support right now would be 15,380. I'll be back for the next hour with Larry's show straight after this. Thanks for being here, and I'll be back in a
patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.